all, and thank you for joining the Kenya Fireside Chat. In today's session, we're going to be exploring the discourse of investing in Kenya with a spotlight on the innovation ecosystem. I'm delighted to say that we have a fantastic set of panelists to join us to share their insights and experiences with you all. As a brief background, my name is Sophie West, and I'm the delivery lead for the Global Alliance Africa project at KTN. As I know a very different KTN might spring to mind when mentioning the name, I thought it might be helpful for me to provide a brief background context for you for today's session. So KTN is the UK's largest innovation network. We exist to connect innovators with new partners and new opportunities beyond their existing thinking, accelerating ambitious ideas into real-world solutions. We actively build communities from businesses, governments, funders, researchers in the third sector, around emerging innovations and sectors to help prepare markets for global opportunities and challenges ahead. Our aim is to establish a network of innovators so powerful its ideas will change the world. So the Fireside Chats today are being delivered under the UK KTN Global Alliance Africa, which is a 6-year project co-funded by the UK's Foreign, Commonwealth and Development Office and the Department for Business, Energy and Industrial Strategy, through the Global Challenges Research Challenge Fund with strategic partnership of Innovate UK. The aim of the project is to drive networking and knowledge exchange activities that can help foster long-lasting strategic partnerships between Nigeria, Kenya, South Africa and the UK, as well as across wider sub-Saharan Africa. So these Fireside Chats are the starting point for one of our key interventions and activities over the coming years, which will focus on investment pipeline activities, providing both downstream and upstream support initiatives. We will put a link in the YouTube chat to our website where you can find out more about the project and our planned activities. If you do have any questions for our panelists today, please feel free to raise them in the YouTube chat. Finally, I would like to thank Andriata and the teams at CC-Hub and iHub for organising the session today, as well as all panelists and participants for joining us in your time this afternoon. I really do hope you'll enjoy the session. I'd like to now hand over to Andriata to start to run the session.
Great. Good afternoon, everybody. It's great to be here. My name is Andriata Muforo, and I'm a partner at Telecom Capital. We're a venture capital fund investing in early to growth tech-enabled businesses across the continent. And today I have a wonderful panelist of very active participants in the Kenya tech ecosystem. So I'll just introduce their names briefly, and then I'll have them speak about a minute each about their organizations, and then we'll get into a discussion about our ecosystem. So we have Muthoni Wachira, who's a fund manager at Safaricom Spark Fund, and as well she's a CIO at Uncap. We also have Lewan Kefela, who's an investment director at Village Capital, and then we have Mark Karaka, who's a founder and CEO of Impact Africa. So I'll just ask that we're starting with Muthoni for just a brief introduction about yourself and your organization, and then we move to Lewan and then Mark.
Absolutely. Thank you so much, Andriata. It's great to be here. As she said, my name is Muthoni Wachira. I'm a Kenyan native. I've been in the entrepreneurial and impact investing space for 10 years now, and currently working, as she mentioned, as a fund manager for Safaricom Spark Fund. We invest in late seed stage businesses that are expanding within Kenya or looking to enter Kenya in healthcare, in education, in SME, and in agriculture. I'm also the acting chief investment officer at Unconventional Capital. We invest at seed stage across the continent through a hybrid instrument. It's an equity-based rev share instrument. It's very unique to this market, and I think it accelerates the impact and the inclusion of local founders.
Lewam, you can go ahead and introduce yourself.
Sure. Thank you. Hi, everyone. My name is Lewam Kefela. I am ethnically Eritrean, but was born and raised in Kenya. I'm an investment director at Village Capital. We find, train, and invest in global entrepreneurs solving major world problems. And we've been in Nairobi since 2012, so a little about 9 years now.
Great. And Mark?
Yeah, thanks. My name is Mark Araki, founder of Impact Africa Network. My background is I spent 15 years in Silicon Valley. 2018, I decided to make the move back onto the continent to immerse myself in the economic development challenge. And my specific approach is to ensure that young, talented Africans have a chance at participating in the digital transformation of Africa as creators and owners. And that's what we do at Impact Africa Network. We have a 12-month fellowship program where we take talent and we work with that talent on venture building. So that's what we do.
Fantastic. Thanks, thanks everyone. And just in terms of our conversation, I think we want to try and touch the different aspects in terms of from an investor or an entrepreneur standpoint. So as an investor, how do you set up a fund? How do you attract deal flow? How do you make investments? How do you fill the talent gaps? And how do you manage the investments to value generation? So I'll just get started with a question for our panelists, and I think I'll direct this at Muthoni around setting up as an investor. What should you be thinking about if you're thinking about setting up your vehicle to be able to invest in Africa, in East Africa, in Kenya? Like, what are the things to consider?
Absolutely, thank you. That's a really good question. I think when you're thinking about setting up an investment vehicle, you need to think about your geography, the size of fund that you're setting up, whether it's a closed-end or open-ended fund, and ultimately who your LPs are going to be. It's fairly easy to set up a limited liability partnership in Kenya. The capital gains tax treatment, however, makes it tax inefficient and unattractive. And so we find a lot of funds considering alternative jurisdictions such as Mauritius, Luxembourg, Delaware, and even Ontario, Canada. And so ultimately so the cost of setting up in such jurisdictions is quite high. You might be able to find legal support that is either low bono or pro bono. I've had the experience of dealing with a pro bono supplier of legal support in the UK, but that's because the sponsor of the fund was an NGO. And so we could benefit from that level of support. If you're not, it could cost up to $300,000 to set up. So it is quite an investment in time and in money. And as you're choosing the jurisdiction, it's also good to consider what are the running and compliance costs associated with that jurisdiction.
Okay, great. Thanks. Yeah, so thanks. I don't know if any other, Lewam, if you have anything to add in regards to some of the things.
Sure, yeah. I think the only thing I would echo from what Muthoni said, especially is it depends on where your investors are, especially your larger investors will typically have stipulations if they're investing in a fund where you need to be incorporated or which entities it needs to flow through. So that can have a big bearing on how you structure your fund. So something to pay attention to for sure.
That's great. And I think also, I mean, the running message is thinking about your investors, right? Because if say the Kenyan investors may actually want you to invest to have your fund domiciled in Kenya. I've come across investors that think that way, or if they are US or in other places. So there's a thought around understanding who your investors are. What's a jurisdiction where that's friendly with the double taxation treaty that Muthoni was talking about, because sometimes it becomes very tax inefficient. So I think it's really something also to use lawyers, right? To be able to support that endeavor. Next, I just want to move on to, so say you've set up your vehicle and now it's day one of your fund. How do you attract entrepreneurs to come to you, to come to your fund for you to invest in? Maybe Lewan, if you can speak about what are some of the things that you do to attract entrepreneurs, and for entrepreneurs to pick you as well, right? Because they also have options.
Yeah, definitely. So our, I guess, structure is a little unique in that we also run accelerator programs where we put out a thesis around a specific sector. So for instance, fintech will put out a thesis and recruit startups that are working on that. And then recruit the most promising startups and invest in a few. So that has really helped us sort of find, develop, and invest in pipeline really, really early. We also maintain strong relationships with a lot of entrepreneur support organizations that exist both in and outside of East Africa. So that's been really beneficial in allowing us to develop our deal flow. I think that one of the things that we have that's super exciting in our ecosystem is the proliferation of a lot of entrepreneur support organizations in finding and developing this early talent and fostering this sense of entrepreneurship. I think where we're a little bit lacking is in the amount of capital that's available to support all the entrepreneurs that are coming out of entrepreneur support organizations like that. But I will reserve that point for a later question.
Great. And I want to bring Mark in. Oh.
Sorry to interrupt, Andrietta.
Go ahead. Go ahead.
I wanted to just, so like, as you know, the investing ecosystem, it's a relationship business. And so as investors, we've typically depended a lot on referrals. I think what that has done is also choked up some of the pipeline, and especially for local founders. And so what I've seen happening more and more, and what I've done as well, is created online application forms that open up that access to your fund at the very early stage, and being very clear in your marketing and your communication around what your sector focus is, what your thesis is, what your geography focus is, what your ticket size is, etc. And that allows, for the entrepreneur to self-assess, before they make the application.
Great. Yeah, thanks for that input. I think I also want to bring Mark into the conversation, because you come from a different vantage point in that you're an entrepreneur and you're working with a lot of local talent and among entrepreneurs as well. So I guess in respect to for entrepreneurs to be seen and to connect with investors, what advice would you have for entrepreneurs when they're looking to raise capital?
The $1 million question. Just be good and tell a good story. So those are the things I would say. Like visibility is such an important thing, but being visible at the right time. As Modani said, it's really a relationship game, and there's this balance between when do you engage investors, because that takes a lot of energy out of your system, and you need all the energy you can get so that you can execute on what you're trying to do, because it takes everything you've got just to get liftoff when you're trying to be an entrepreneur. And so fundamentally, it's you've got to have a way to you have to be executing exceedingly well. Right? You have to have a story to tell, because when you do that, there is music to what you do. You'll find ways to make it happen. So the first thing I would do is just make sure you're kicking butt in what you're doing. Right? You are executing phenomenally well. You invest all your time, energy in getting traction. And then once you have traction, then that's the right time to actually reach out to investors. And yeah, that's the only thing I'd have to say about that.
No, and it's quite clear, and as an investor, I completely agree as well that execution beats anything else. So if entrepreneurs are able to execute and show results, that speaks a better story. Completely agree.
Can I add something to that, Andresa? Yeah. I think the other thing that is so critical is really understanding the market and the problem that you're solving, and understanding all the frictions that exist in that market better than anyone. I think that is a characteristic that really helps an entrepreneur succeed. I think the other thing, as it relates to when do you talk to investors or how do you approach investors, is acknowledging there are different investors that invest in different stages, right? So there are people that are ready to invest before you've launched a product. There are people that are only invest once they've seen traction. And I think as an ecosystem, we need to do a little bit of a better job in mapping out like what exists at what stage, so that entrepreneurs have an easier time navigating where to go when they hit a certain stage of development. But yeah, I just mean to emphasize that it varies, and I think that actually understanding the problem and having lived experience in it is super beneficial when you're trying to build a company around something.
Great, fantastic. And I think closely linked to that, Muthoni, could you speak about what you look for when you're making investments? Like what are the, I know it's probably a significantly long list, but if you were to tell me the top three or four things like must have within a business for you to even, take a closer look, what would those be?
Okay, so one is the team. We always look at the team. I invest in early stage companies, so the team matters a lot. Whether the idea that they have is scalable, what the competitive landscape looks like, and whether they actually have a strong value proposition and why they're the best place to deliver on that solution, and whether the idea is timed right. We find a lot of ideas that are either too early for the market, too late, or on time. So you want an on-time idea that can scale. So if I had to pick my top three, those are like my top three. Obviously, it has to align with the fund thesis, the stage, etc. But top three.
Great, fantastic. I just want to move on to the kind of next topic. When you think about, so we'll say we've set up our fund, we've identified companies that we want to invest in, we've invested in. Now we're in the portfolio. We now have a portfolio of companies. And one of the things that we've seen in the market is that companies not only have to compete in the capital market, so when you're fundraising to get capital, but you also have to compete in the labor market to get good people. And it's a place where entrepreneurs and CEOs struggle or are competing to get good talent, and we need more talent in the market. And I think I want to pose this question to Mark because of also some of the work that you do around building talent. What advice would you have for entrepreneurs as well as investors in terms of supporting their portfolio companies about how do you attract good talent, how do you retain talent, and what are you seeing in the market through your work?
Mm-hmm. That's actually a very timely question in terms of talent, attracting talent and retaining talent. I feel right now in Africa, there is a generation of people who are ready for something to be involved in meaningful things, to be involved in being part of the solution. There are people who we have attracted in our own platform who left the banking space, right? Basically when they're just starting their careers. And they're like, I want to be involved in something that makes a difference. And they took a pay cut to come and join Impact Africa Network. And I have two examples of people like that, one in their mid-20s, one in their mid-30s. And in terms of attracting talent, it comes down to right now, I believe, if you have a story that talks about changing the African narrative, and you're authentically about that, and people can sense it and they can see it, and you can actually show it, then that's, to me right now, if you're building in Africa, man, this is our moment. You have to be involved in something that is bigger than yourself, that will change lives. And so to me, that's number one. Number two, then you have to actually show and prove. You got to show and prove that you are about it. You're not just talking about it. You have got traction. It's like this, Andrea, nobody's going to attract your attention if they don't have traction, if they're not showing a track record of execution. So as an entrepreneur, know when to approach talent, Know when you need Andrea or you need Mudhoni. When do I need somebody like that? Because you have got to meet them just in time so your story matches with what they believe they would like to be part of, right? So approaching people at the right time. Retaining talent is just about, being the kind of person who people want to be around. High integrity, high collaboration. So our core values at Impact Africa Network is high performance, high integrity, and high collaboration. Fundamentally, that's what talented people in general want to go to a place where they feel that those things exist, that they can count on you, that they're working with other great talent, right? So you've got to be great talent yourself. And you got to have that high integrity, and you got to have that high collaboration. You can't be a Mr. or Mrs. Know-it-all. And so in terms of retaining talent, you got to create an environment that you would like to be a part of, that you're doing something that, speaks to the African spirit right now. So that's what I got to say about that.
Great.
Andrea, maybe if I can just add. Yeah, you saw me unmute myself. I want to agree with Mark. I think there has been a pervasive narrative that Africa has a talent issue and it has a pipeline issue. And that is simply not true. I think what we do have is a homogeneous network issue and a resource allocation issue. And I think we need to do better to showcase to the world and to ourselves what that talent looks like, what that pipeline looks like. And I think there is a real hunger, as Mark was saying, to contribute to the changing narrative of the African continent. And I think the youthful energy there and like the momentum that we're seeing in that is something that if we don't tap into right now is such a missed opportunity.
Yeah, if I can, sorry, if I can briefly add to that.
For sure.
I think it's a topic we're all excited about.
Yeah.
I think that I completely agree with what Mudhoni said. I think that there is a lot of potential that continues to exist as we think about how do you sort of staff these companies with a lot of people starting, typically going for bigger firms that have more stable jobs. I think as we start to see exit activity, like what happened with Paystack, and as I'm sure will continue to happen over the years, the potential of like stock options will really start to resonate with a lot of people. And we're already starting to see some of that now. When you're joining an early stage startup, that's obviously one of the things that people should think about in terms of what the pros and cons of taking a position at an early stage startup are. The other key feedback I would give for founders that are running fairly early companies is when you raise a significant round of financing, revisit the compensation that you have for a lot of the key members of your team. That is super, super critical to make sure that they feel valued as they continue to contribute to the growth trajectory. And absolutely take stock options seriously and spend a considerable amount of time educating on what the prospect of stock options actually mean, because I think there's a lot of confusion as it relates to that.
Great, fantastic. All great points.
Let me just chime into that a little bit, because that's such an important element of talent retention and the bigger story of, being part of changing the African narrative. And we need to understand, why are you doing what you're doing? What's your driving force, right? Like what makes you come alive? And I think for most people, it's making a difference. So if you're building a business, the idea is as you go up, take others with you. That's the whole thing. It should not be any more complicated than that. And fundamentally, what does success really, when you quantify success for yourself, when it comes down to dollars and cents, what is that number for you, right? And because at the end of the day, you find out that it doesn't cost that much money to live, right? And I'll tell you, and everybody hears this all the time, right? It's when you're struggling and trying to build a business, some things sound very outlandish. The idea that money won't make you, doesn't buy happiness. What we know buys happiness, it's proven time and time again, is making a difference in people's lives. So if we know that that's true, then why don't you construct a system and a structure in your company that will be about making a difference in people's lives? And that will simplify so much for you in terms of just having a true north value system and being honest with your people and attracting people because you're sharing the pie. I think we need to kind of really, in Africa right now, we need to see that the opportunity is bigger than any one of us. And if we can invite the best talent to actually walk with us in that journey, my goodness, we just improve our odds dramatically. So it's actually a strategic move to share equity with your employees.
Great, fantastic, and I think that these are all great points, and I think the fact that we are starting to see the actualization of some of the stock option is when they will actually begin to resonate and connect with people, because cash now is important, but even cash later is also, like, I think that really creates kind of that retention effect and a longer term view of the business, which is great, and I think we'll start to see more and more of that happen.
Andrea, as we're still on that topic, I wanted to just say the role that we play as investors. And I know you and your organization, TLCOM, have been doing this, which is really commendable, is offering liquidity events for the team and for founders at early stage, not full liquidity event, but like partial liquidity event. And that allows, people who've been working 5-10 years at below market rate returns to fund their dreams and their goals, because I think cash is king still, and people do have dreams and goals to meet. They have families to raise, school fees, etc. We do live in Africa; it's a high friction environment, and so let's offer that to people who've committed to transforming the continent.
Great, fantastic. I think I'll ask one more question before we move into Q&A, which is around what's in your view, what's still lacking within our ecosystem? Because I think we probably have people on the call who work within ecosystem support, so it'd be great to get your perspective from investors, from venture builders' perspective.
If I could draw, it would be a $sign. We need more capital. I can't say it enough. We need more capital, more capital, more capital. But I think we also need more local fund managers, because context is queen, and it will drive more capital towards local founded organizations. I think, there was a lot of discourse last year and the year before around the percentage of capital going to local founders, especially in Kenya. It's not the case in Nigeria and South Africa. It was disproportionately low at under 6%. And I feel like the only way to change that is to have more local fund managers, drive more capital. It improves resilience and sustainability, and overall it's progressive.
I will 100% co-sign what Modani just said. I think we need a lot more capital across the spectrum. I think we need a lot more capital in the early stages, in the growth stages, in the later stages. I think there continues to be a lot of potential that's coming out of our ecosystem, but because there is a shortage of capital, we don't really reach that level of actualization that we potentially could. I think a shortage of capital also pushes investors to look for capital efficient models, which is great, but also minimizes the ability for more capital intensive models, right, to take shape and to be built over the long haul. And a lot of those sort of marketplace capital intensive models would be super beneficial to the ecosystem as well. So absolutely need more capital, and absolutely need more local fund managers administering that capital.
Yeah, so I'm very much a humanist, so I always approach things from more of what it means to be human, because I think when we make those connections, then everything else becomes easy. For me, I think in our market in Nairobi, I think especially for the people who've transcended or at least elevated themselves to a certain level of success, we need more humility. I'll say that again, we need more humility. we just need to realize we're just human beings. And in Africa, I call it the Bonham Kubwa syndrome, Bonham Kubwaism, and everybody is kind of status is a big deal. And, people who've reached a certain level have to check and say, is this somebody I should associate myself with, and so on and so forth. And we all suffer from that. But at the end of the day, we need to remember that we are headed for the grave at the end of the day. And we just need to always remember that on the other side of that email, on the other side of that text, whatever it is, it's just a human being, just worthy as you and me. So making yourself accessible, right? And not separating yourself from people. I'll give you a story. So there's one gentleman who, I'm sure you guys know, Michael Siebel of Y Combinator. And this guy, I sent him an email 2 years ago. I was kind of looking at the time to, anyway, I reached out to him and he responded to me and we had a call. He didn't know me from Adam. And, that's the best of what Silicon Valley has. People don't get too big for their britches. They don't separate themselves from the folks who are coming up. And that is one thing that is a big problem here. Huge problem. People, up and comers don't have access because people separate themselves and they pull the ladder up with them. The other thing we need is we just need to believe more. Jesus Christ, we're walking into the African century. You see, once we see the opportunity is bigger than any one of us can contain, then holy cow, we just have to do it together. So if we believe more in the continent, if we believe more in what's possible, then we just have to work together to pursue that end. And so I feel like there's a lack of maybe belief in what's possible. We need to believe more. What else would I say? Of course, we need more capital. There's no question about that. The structural thing, you need more capital. But I would say those are the two things. And from an entrepreneur side, people need to become, you need to, somebody said it over here, be the best in that particular space that you're in. Don't expect somebody to back you up if you haven't double-clicked on every single element of the market you're trying to build into. Why would they do that? So you've got to be the leader in that space. You've got to develop yourself in what you're doing and in becoming an entrepreneur, and read more, listen more, just become better. And if you authentically pursue self-improvement the best you can, you can't but grow. So you have a responsibility to be the best in your space and to be the best version of yourself.
Fantastic. Fantastic. I really love those responses from the practical, we need capital, to the softer skills, which are really important, around humility, paying it forward, being supportive of our ecosystem. And I think also what I will also add to capital is business building support. So I think the investors that are coming should also bring support, operation strategy, internationalization, and the like, because many of the entrepreneurs are building businesses for the first time, right? So they do need more support from that respect. I'm just going to go into the Q&A. And feel free for the panelists to just answer the questions. I'll read the first one that we have here. It's from Jeremy Ngugi. He says, for those interested in breaking into VC in Africa, especially from uni, how do they do that? How do they gain relevant value and experience?
I love that question. Probably because I think we need to do a better job of demystifying what it means to be a VC, a venture capital investor. And there's so many routes to getting into VC. And so actually, I'm starting a podcast. Loam is going to be on the pilot podcast. It's called Breaking Into Venture, actually.
Perfect.
And I'm going to be interviewing, investors. How did they get in? What challenges did they face? And especially female investors. What are they doing specifically to make the next generation have an easier time of it? So it's a great question. I think we do need to do a better job of demystifying. And the easiest thing is to post job adverts. Like that is like bottom line, a simple low-hanging fruit. As I said, the relationship side of VC is not only on the pipeline and portfolio building side, it's also on breaking in as an analyst and an associate. And so creating an open platform where anybody can apply, I think is a low-hanging fruit.
Great. That's fantastic. I think we all need to get onto that podcast and get some tips around how to break into venture.
You'll be on it too, Andreata. Just wait for the invite.
Okay, great. And I think also my view around this also is that there's never a clear path to some of these things, but it's about doing like smaller things that are relevant to get you to that place. So an entrepreneur, you can start as an entrepreneur. Entrepreneurs also become venture capitalists. You can start in finance and then you become a venture capitalist, or you can start in the corporate world and become a venture capitalist. So I think part of it is, because there's very few funds, part of it is doing activities that are relevant to what you do as a venture capitalist. So working with entrepreneurs, supporting ventures, doing the legal stuff, the documentation. So I think being around those skill sets, and then eventually you can make your way there. Okay, great. There's another question here around, so it's from Richard Omolo says, and he asks, why are most startups in Kenya dying even after heavy investments?
That's a great question. I don't know that we can assign like any specific characteristics or attribute it to anything specific. But what I will say is, when it comes to building a business, if it's not self-sustainable, you need to continue to be able to raise significant capital across the spectrum. Some business models are not profitable at small scale and require large scale to be able to operate profitably. So if they have like a shortage of financing across the spectrum, that can be absolutely a challenge and halt their progress completely. So shortage of capital is absolutely one of them. The other is it might not be a business, or the business model might not make sense in the context. So I don't think that there's any like one reason why startups in Kenya have failed, even if they're heavily funded. But I do think one of the things to pay attention to is any capital shortage across the spectrum is super, super difficult on a company that's not profitable. And then sometimes it's just a matter of building the wrong business model for the wrong context, or entering the market at a wrong time. I don't know if anyone else has something to add to that.
Yeah, I'll add to that. I think, I don't know if it was Mdoni who mentioned that only 6% of all the total capital that got deployed went to local entrepreneurs. Is that right, Mdoni? Right?
That's correct, yeah.
So what we can infer from that is 94% of the money went into foreign-led startups. So this question should actually be a little bit more specific, right? Because it clearly says that a certain type of founder got the money. What I've been observing, right, and it's a hunch. It's a hunch that before it was a hunch, and now maybe it's starting to actually be proven out right, that Africa is so contextual that it's very difficult to build a business from New York in Africa. If you're sitting in New York and you're the CEO, it's very difficult to build a business on the ground in Africa. Okay, any business for that matter, because there's the culture, there is the structural stuff. Like, how do you block and tackle? How do you know what customers, how to pivot? Business is a felt thing. This is what people forget, especially in the building phases. And so when you're separated from the culture, people in Kenya say vitu kwa ground is different, which means things on the ground are different. Okay, so what you're seeing right now is people who are trying to build a business just intellectually and at a very spreadsheet level, and not rolling up their sleeves and getting into, this is my perspective on the thing. And so, yeah, I think that is part of the problem. Of course, it's not the whole story, but I think there is, you have to love. Africa is a hard market, man. Let's not get it twisted. So it behooves you to hug your customer more, to really get on the ground, to really understand when you look at a certain person and understand their context. That can help you actually tweak your product better, right? Your go-to-market strategy. Do things that make the difference. You see, at the end of the day, you look at all these companies like Airbnb and all these folks. These folks at one point had to fly to New York and take pictures of the homes that people are renting so that the pictures could be nice enough for people to actually rent. That's a tweak. So imagine if they were building it from Mars, right? How would they do that? So let's not get it twisted, right? You're not going to be able to build your business separating yourself from the culture, and you're trying to build a business for the culture. It ain't going to happen.
Great. I think maybe what I would also add on this question is, in terms of a response, is that like venture businesses are like, the failure rate is high globally. Even if you go, like, of the Facebook that has risen, there were tens and tens of companies that didn't make it, right? So there's also a piece around like the business, like very few, the fatality rate, the mortality rate is very high. I think that's also something to keep in touch. So just because you got funding, it doesn't mean the business will be successful. There's still, the fundamental business things that need to come to bear. And then I think also what I've also seen is that there's some trendy things that are in, and lots of capital goes to those trendy things, and people kind of forget the fundamentals. Okay, great. I think we let's okay. We're very few minutes left. What I would like to do is just to get a parting thought from our panelists around kind of the Kenya tech and innovation ecosystem. Like, you've been around for a while. Like, what is the parting thought you can leave with our audience?
I'll go ahead and go. The time is now. That's all I gotta say. The time is now.
Love it.
I think I would say that the ecosystem is going through a lot of development, and we're seeing a lot of progress, and we're experiencing growing pains, and it tends to get a little bit scary with people kind of being very quick to sort of judge this market and its potential, with seeing like a few sweeps in regulation and other activity happen. But this market is a promising one. It's a big one. It's fragmented and will be very, very heavy on friction with this first wave of innovators until we get to second and third waves of innovators. So I think what I would say is like a lot of patience, because a lot of this is growing.
That's awesome. I'll agree with Mark and Niwam. It is our time. I think patience, give time. Again, it's a young industry. We are where we are supposed to be in the evolution of the space. I think what I'd love to see is more local funding. I'm seeing that obviously with successful entrepreneurs who've been able to exit their ventures. They're now becoming, angels. They're raising micro VCs. So I think the more capital that we start to deploy from within the continent, it'll prosper us faster. Fantastic.
Thank you so much to our panelists. Great insights, and I couldn't agree more. The time is certainly now. We've been around venture capital in Africa for the last 10 years, and I think this is the best we've ever been at, right, in terms of entrepreneurs, strong entrepreneurs, capital actually coming in, and an ecosystem that's supportive. So great. Thank you very much, Muthoni, Mark, and Lewa. It's been a great conversation.
Thank you so much, Andrietta.
Andrietta, you've been a great host.
Yes, thank you. Thank you.
Good afternoon, everybody. Welcome back to the second session for today, our discussion around the Kenya tech and innovation ecosystem. My name is Andrietta Mforo. I'm a partner at Tshimologong Capital. We're a tech VC fund investing in early to growth stage tech-enabled businesses across sub-Saharan Africa. And I have with me two great panelists that are going to join me in this conversation. Our first session was around early stage investments, and now we're shifting to slightly later to growth stage investments in the tech space. So I have Dotun, who's the associate director at Novastar, and Augustine, who's a manager at Endeavor, who are joining me in the conversation. Welcome. I'm going to just ask them to give a brief introduction of themselves and the firms that they work with, and then we'll dive into the discussion. I'll start with Dotun. You're on mute.
Haha, usual, starting a conversation with being on mute. Thanks, Andrietta. Thanks for this panel, and well done for the previous one. And thanks for the guys that put this together. I'm Dotun, and with Novastar Ventures. So first of all, myself, I'm a Nigerian, as you can tell from my accent. I grew up in Lagos. Was studying in the UK, and moved to the UK 17 years ago to do masters and a PhD. So my former life, I used to be an academic, so I might be a bit academic in my conversation today. But then I became a startup founder after my postdoc, and then became an investor after exiting that business, and started coming to Africa to work with startups in terms of entrepreneurship development and doing support for startups. And I realized I could make more impact by being an investor again. So I joined Novastar just over 2 years ago now to work with a firm when we started expanding to West Africa. So Novastar is a venture capital firm where we started life in East Africa when we raised our first fund about 6 years ago, $80 million fund, investing in high growth businesses that are solving problems for the low-income mass market. And our focus then was just to invest in companies in East Africa. So in that fund, we invested in about 15 businesses across Kenya, Uganda, and Ethiopia. And towards the end of 2018, we then raised the second fund, which is the one that I joined, which expanded the thesis beyond East Africa to West Africa. And we are always investing in early stage companies, but more beyond seed stage. So we're going to be discussing that a lot today to define what does that mean. But we've been operating in East and West Africa and investing across both region and in many companies. So I'm looking forward to more conversation today.
Great, thanks, Augustine.
So hello everyone, my name is Augustine Ndungu. I'm Kenyan, and I had the opportunity to study abroad, also in the US. Started my career there with Ashoka, which is the organization supporting social entrepreneurs, and then moved back to Kenya in 2013. And have continued in the same line of work. So currently working with an organization called Endeavor, which is an offshoot of Ashoka as well. It's a global network of entrepreneurs, as we say, and this is over 2,000 entrepreneurs around the world. The Kenya office is just about 4 years now, and we have a portfolio of about 12 companies and 18 entrepreneurs in that portfolio. So basically, my current line of work is managing the search and selection process for these companies, as well as the portfolio servicing. We focus on 3 key areas in terms of supports: access to capital, so this is on the fundraising side, access to markets in terms of commercial introductions, and also finally in terms of access to talent. Every year we take an average of 4 to 6 companies through our selection process. It's a rolling basis application. So we're always on the lookout for companies, and that's why this conversation is actually quite timely, because for us, pipeline is quite an important part of our work. As well as both sides, let me say both sides of the pipeline, in terms of also onward sort of support that companies need beyond our kind of support. And so we are quite excited to figure out how to better strengthen our partnerships with other ecosystem players along the value chain. That's it for now, and I look forward to the conversation.
Fantastic. Thanks very much for the introduction. And we can dive into the conversation. So, our previous panel was around early stage investors. So looking at seed and super early stage companies. And now, Endeavor and Novastar are slightly later stage. And the first question I have for you two is around kind of what's the role of early stage investors in your work? And the goal here is more to see, is the process working? Are you seeing companies that have gone through accelerators, incubators, or have seed investors, or is the pipeline working in your experience? Augustine, would you like to go first?
Sure, happy to take this first. So I think from where we stand, and Endeavor definitely defines itself as a growth stage organization. So we look at companies that have post-revenue for one, and minimum of $1 million in revenue, which essentially means we are looking at the top tier of the tech-enabled ecosystem. And what that means is that most of the companies that get through our process, they have already had a 2-3 year traction period. So pipeline for us actually is about strategic partnerships with other players in the earlier stages. And the first and most important validator is, has this company been able to raise some sort of external funding in order to sort of grow their proposition or their product or service up to the stage that we can then support them beyond in terms of their growth plan. What that has also translated into, I think there is additional areas of support that and partnerships that we are keen to build on. One good example is on the inclusion agenda, which we think there is always the question of how much our portfolio is balanced, whether it's on gender lines, whether it's on sector lines, and even in terms of the types of businesses that we are able to get on board into our programs. So on the inclusion side, I feel that this is where there's quite a lot of work. On one hand, it's an issue of awareness. Quite a lot of local entrepreneurs, say, for example, don't know about our organization, about our work, even where we are available to support them. And so this is a continuous endeavor, and especially with regards to partners who are more embedded in the sort of local ecosystem, just because, again, Endeavor plays at a global ecosystem level. The second part around sort of how we work with the network partners is actually on the due diligence or the validation part. As we put the companies through our selection process, it's very important that we are able to present them in front of local investors and other sort of ecosystem players, so that their opinion as well feeds into the decision in the long run. But more importantly, that they also are able to share feedback for the entrepreneurs. This we found to be the most strategic form of engagement with the companies, or with the other players in the industry, just because without these kind of strategic partnerships, we find that companies that get to our stage, oftentimes they are not ready, and then the result is that we have a long due diligence process. The experience may not be as exciting as it would be, and especially for us, the fact that the role that we play is only part of their growth or evolution journey, and so that it's key for us to work with both players on the downsides as well as the upstream. So that's my quick thoughts on that, and happy to take in further.
Fantastic. And Dotun, do you have, like, I guess as a practical example, are there companies in your portfolio that have worked with the early stage investors?
Sure, yes, there are. There are few of them, both in the Fund 1, that is primarily based in East Africa, and Fund 2, that have worked with early stage investors. To answer your question directly, there has been good impact. Every later stage investor, even though we don't call ourselves later stage investor, we are early stage investor, even though the market has been moving us up down the chain. But every second ticket investors find value in the previous investor who had invested in building the resources and the education for the entrepreneur. So there are three things I'll touch on here. One is the fundraising stack and how that has developed in Africa and the way we've seen it. And the second is the ticket size that has changed as well. And the third is the ecosystem dynamics. So first in the fundraising stack, when I started coming to Nigeria to do angel investing, what I noticed was the lack, the stack wasn't well developed as it is now. What you had was a lot of very super early stage companies, people with ideas, working in hubs, working with accelerator programs. There were about maybe 3 or 4 accelerator programs in Nigeria in 2016 or 2015. And there were, I assume there will be a lot of accelerator programs as well in Kenya at that time. That was the boom years for seed stage investment. And there were lots of people writing $10,000, $20,000 checks. And you have some angels playing in Nigeria, particularly in Nigeria. And lots of grants money coming in as well, seeding entrepreneurs into the play. What we then noticed was that there was huge gap between that stage and companies that needed to raise $1 to $2 million. What you see is those companies, they could raise maybe up to $150,000, $200,000, and then they go into this valley of death, where there's not enough Series A businesses that could take them on. And some businesses die even though they could have survived. So the fundraising stack wasn't well developed. Now that has changed with the likes of us, TLCom, Patek, and some other people who have come into the mix to build that stack. Now, could it still be better? Yes. But what that has done is it has increased the ticket size of people like us. So our fund one, an average ticket size was less than $500,000 because we are probably the first institutional check-in, or maybe the first check-in period, or we are investing shortly after angel investors are coming to the business. So we're doing a lot of the heavy lifting with the entrepreneurs. We're teaching them how to understand venture, how to raise money, how to work with institutional investors, shaping their governance. What has happened now with the stack being more developed, like I said in point one, is we're now seeing we're being moved. Our ticket size has moved to about $1 million on average at the beginning, and we've seen now a lot of work being done by angels and by solo GP fund, micro VC, what you call micro VC, and a lot of accelerator programs that are more mature, like Y Combinator or Techstars. An example of that in our portfolio company, we have Max.ng, who we led their Series A. 3 years before then, they've gone through Techstars. And so they have a kind of, even though they've not done equity round, they've not done a price round, they've done several safe, but when we came in, we were able to consolidate their first price round. And we've been seeing that a lot now. Some of the business we invested in as well recently in East Africa that I was part of, they've gone through some accelerator program and several safe rounds before we met them. And that's very valuable for people like us that we call later early stage, because we're still early stage. And the last thing I'll say is that the ecosystem dynamics is changing. And we hope that it continues to change. We've now seen that stack developing more further into exit, and more PE fund now coming in to take things over from us or invest alongside us in Series B, C. So generally, I mean, again, to answer your question again, that there is huge help and there is huge benefit of having that early stage seed round being led and being prepared by accelerator program, incubator programs, because it makes our work easier and it aligns us a lot with the entrepreneur, irrespective of whether the business is 3 or 4 years old. It's just that maturity and that robustness that they have because they've gone through those programs.
Great, fantastic. I like the history you walked us through in terms of how the ecosystem has been evolving, and I also completely agree. And I think over time, what we're seeing is that in the kind of late A, B, C space, there are very few players. You could count them on one hand or on two hands, or if you're very on a good day in terms of kind of Africa focused investors. So So yes, the capital is coming, but I think we still need more capital in the ecosystem. Okay, great. I want to shift gears more towards, you know, in the first session, we spoke about kind of deal sourcing, portfolio management. I want to go a bit deep into kind of portfolio management around governance. You know, in terms of, you know, many of the companies that we invest in are fairly early stage and needing to consolidate their governance. So if you, if either of you can just opine around kind of the importance of governance, what that means in practice, why it matters, and how you support your portfolio companies in that respect.
So yeah, I think corporate governance is a big topic, both I would say in terms of the Endeavor universe, but also in the ecosystem that we're operating in, which I would say generally it's the emerging market context. For Endeavor, one of the main sort of ways that we support companies on our portfolio is actually running advisory boards for these companies over a period of 1 year. So we basically identify one key problem or challenge that the company is working with. And then we identify 4 to 6 business leaders who are going to work with them over a period of 1 year, extendable for another 6 months, meeting once a quarter in a 2-hour session where we actually run the session on a very regimental format. And the idea is that through the advisory board at that level, the company is able to quickly make decisions that help them to get closer to the goal. In other words, the corporate sort of advisory board program for Endeavor is meant to get the companies essentially to run sort of the practice run for 4 more, let's say, independent board of advisors to set up for a full corporate board structure system. And what we've seen is that most of the companies that come to us with some sort of an advisory board or a board in place, they're actually much better placed, both in terms of going through our own due diligence process and also succeeding much later once they join the program. And the main reason for that is, number one, there is an increased sort of perception of risk when you focus on emerging markets. With most of the investors and most of the money that we are sort of putting into the ecosystem coming from outside, the old problem for Africa, which is Africa, the country, rears its head once again. And the main challenge is that companies have to sort of sell or tell a very compelling ambition that is inspiring enough to get the investors to want to invest in the business. But then on top of that, explain the measures that they have in place in terms of ensuring that the risk, perceived risk especially, is a bit more in a management, in the managed category. So what that means is that companies or investors especially, and from an Endeavor standpoint, what we see as valuable is that the entrepreneur shows that they have surrounded themselves with people who are going to help them to think through their business in a much more sort of thorough way. And on top of that, that they're also going to sort of put themselves or subject themselves to a higher level of accountability. And this to us is a key indicator in terms of success, not just for the Endeavor selection process, but also for success in the market and therefore in the portfolio, and I would say generally in the ecosystem. We think that this is going to be an ongoing line of work. And we also see that, for example, within the broader sort of private sector, especially when you look at a country like Kenya, even on the larger corporates, they still have quite a lot of work to do around corporate governance. So this is not a startup issue alone. It's not an ecosystem issue. I think it's more of an evolution of our economics so that the country can have a bit more, let's say, longer term planning and governance systems and structures. This is something that is going to cut across the board and which actually provides a very, very good opportunity for startups to work with corporates and also for investors. So essentially to bring the entire ecosystem together around corporate governance.
Very well said, Augustine. And I think maybe Dotun, to continue the conversation, how should companies think about structuring the boards, and at what point, just based on your experience, at what point does it make sense to put in place a board?
Sure. So if I put myself in the shoe of entrepreneur, which I've been as well, having run a startup for 3 years, and which has founded and grew it. I looked at the stages of life of startups, the life cycle of a startup, divided into about four major stages, broad stages. I mean, we can debate what does that mean, but startups, you start from validating your hypothesis. So that's the first thing. That's the first stage where you're figuring out, is there a business here? Who is my customer? How do I even build a product and other stuff? Validating. And it could be you, or it could be just the entrepreneur, two people doing that. Then you quickly move into model formation, building a business model around the idea after you validated the hypothesis. And then the third one is growth. Again, and this could be quickly or it could be take a long time. But it's a moment in which the startup experiences a growth spurt. And then there is a steady state where the model has been proven, growth is going on well. Now, we can debate what time you need to be raising money and others, and a timeline for that. But those are the four broad stages that I think startup life go through. In between validating your hypothesis and the steady state, there are three things you need to care about. And when you need to bring them in is very important. One is governance, which Augustine has really addressed. The second is the culture, and the third is vision. And not in the order of priority, but those three things are very important. Now, when do you start thinking about, and governance, board is part of governance, at what stage do you start thinking about board formation? I don't think it's in that hypothesis formation, hypothesis validation stage. Because at that point, you don't even know what business you're building, what's the product and things. And some people get stuck there because they felt that now that I've registered my business with maybe CAC in Nigeria or Kenya or equivalent or Delaware, I must have a board. And then you got your uncle or somebody at that stage. That is not the best time for you to have a board because you don't know what value those people will be bringing to the table. And you don't want to complicate a lot of things that will be happening in your business at that stage. So the best time could be in between when you actually form the model and you are growing. And it's not about what time you're raising money. It could be you could have raised money at the beginning when you're forming the idea, if you've gone through an accelerator program. But the time that you need to have the board is when you need it. And we have to, I don't want to go too much into the role of a board. I mean, board is about governance. It's not just about giving you ideas, it's governance. And you need to separate between governance, role of the board, and the people that are helping you to think through the business. Now, ideally, you want both of them to be the same, but in some cases, they are not. So you can have a small board who are performing the fiduciary responsibility of governance and with an idea of what is happening in order to make the right decision. And you also separate that from people who are giving you advice. And you can bring both together in board meetings. Now, the way we approach it at Novastar is when we join a company, we insist on being a member of the board. We provide that governance role because we have consent right, but we also provide the operational advisory role. And what we do is that we say sometimes, I mean, we insist on multiple board meetings, by the way. But in some cases where it's startup, you don't have to be having board meeting every month. It's okay, fine. We separate the board meeting, it could be quarterly. But there are maybe 6 times in a year where we come together and do subcommittee, which is basically we're not making decisions as a board member. We're not writing minutes and stuff. We're discussing high-level operations of the business. How are you thinking as a startup? How are you building your culture? What are the challenges you are facing? How can we bring more help in? And startup founders need to understand that. And how do you bring those people in? Now, I would say a lot of startups make a mistake by not bringing their board, by not setting up the board early. And some also make mistake of setting it up too early and bringing the wrong people in. So having the right investor help you to think through that. Or in some cases, joining the right accelerator program, they can help you think through what sort of people should you be bringing into your board? How many people should be there? You don't want to stack your board with 5 family members. That's wrong. And you don't want to stack your board with your friend because they agree with you. That's not good for governance. Your investors will insist that you get rid of that. And you also don't want to make your board to be too swing towards your investors as well, such that decisions are made only for your investors. So there's a balance there, and it's the right timing to set it up that will help you to make that balance and working with the right investors to help you think through those challenges and the questions that you should be asking.
Yep, great, fantastic, and I think it's certainly something that as a founder to think about and to implement. I mean, if you're raising capital at the later stage, it will come. Most investors who invest, a substantial amount of money do require a board seat. And I think it's more to, the way we think about it is that serving as a support and the sounding board for the entrepreneur, right? Because nobody knows everything, and everybody has something that they can bring to the process. Great. Now I want to kind of have us move 30,000 feet above sea level, and more towards kind of the investment horizon for tech investment in Africa. And here, just to hear, I would like just to hear your thoughts around, like, where do you think the ecosystem is going in terms of, what sectors are becoming attractive, the things that are lacking in the ecosystem that need to be put in place. Yeah, just your view around where are we going as an ecosystem in tech Africa VC investing.
Yeah, so I guess I'll go first again. And I think this is where I get quite excited, actually, because I feel that, what the future holds for Africa generally is actually quite bright. And I think it's really a question of whether we'll be able to take advantage of the opportunity, not a question of whether there is an opportunity. And I think Endeavor, especially with its global footprint, we are able to look at this from both the local market point of view and also the global trends that we are seeing. And really try to understand where our ecosystem fits within or stands compared to other ecosystems. Number one, we think that based on the fact, or in terms of just the fundamentals of our economy, what you describe as the emerging market context, we have a young population with a median age of 19 years. We have a least urbanized population. So urbanization is going to be a major driver. And of course, the more people move into cities, the more young people, let's say, graduate from school, they look for jobs, they start families. So the foundation in terms of, let's say, market opportunity is quite there. And therefore, the second part is actually on the capital side of it. Compared to other parts of the world where there is more or less peak population or plateauing population, that means that a lot of global investors are going to still be looking to Africa for, and let's say Latin America, the global South in general, in terms of growth markets. And so that again plays to our advantage. And then the third point is actually the fact that where you have capital, then talent will also flow towards there. Whether this is a diaspora, like myself and Dotun coming back to the continent, or it's going to be also other young people, let's say the ones that we met or we studied with and worked with abroad, they will also be curious about the market. And so the fundamentals, I think, in terms of both the innovation side and in the investment side as well, they are actually favoring the market and specifically, the major economies, Kenya, Nigeria, South Africa. On the other hand, I think the biggest gap that we have so far has been an articulation and also a very good examples that investors especially can see coming out of our market. The investments of the last decade, unfortunately, if I look at sort of the ecosystem as a startup on its own, a lot of it has been investments that have not necessarily had the outcome, even from a VC standpoint in terms of IPOs and exits, a significant number of exits compared to the companies that are getting the support, which is immense compared to even other markets, knowing that even some of the, let's say, traditional development aid was actually being channeled to the ecosystem. So we still need to have quite a good number of case studies, successful case studies of companies that have actually been sort of born out of the ecosystem, supported through the ecosystem and successfully exited, so that then those same entrepreneurs can start sort of to reinvest in the ecosystem. From an Endeavor standpoint, we've started to hear, entrepreneurs who express their sort of long-term ambition as sort of exiting engineering and exit from the companies and then going into investing. This is not a conversation you heard even 3 years ago. ago. And so this, to me, is a positive trend. We've also seen that in terms of global, sort of the global, coming out of the global recession, especially out of the current coronavirus pandemic, the fact that there is an increase or an uptick in mergers and acquisitions as a form of exit for companies. So we've seen this from both sides in terms of large players looking for smaller acquisitions in our market as their market entry strategy, as well as entrepreneurs who are now more than ever thinking about sort of the sustainability of the companies, even from an exit standpoint. And so I think this again points to both opportunities for entrepreneurs and investors, and as well as talents, with the condition that it's going to take a lot more collaboration, a lot more working together within the continent and within the ecosystem specifically to turn these opportunities into realities in the shorter timeline, as opposed to if it's going to take much longer. So generally quite excited, and I think the future holds quite a lot of good things, across the ecosystem in Africa.
Perfect. Thanks for that. Dotun, any sentiments on this?
Yeah, sure. I'll just piggyback on Augustine. So I'll say three things actually. One is bad, one is good, and the other one is in middle of the road. So three things basically about the narrative and how that narrative has played out in the African tech ecosystem. What has happened, and I'll talk briefly about the exit expectations and the reality, and how we should be thinking, how I personally was been thinking about that. So the first about the narrative. When I exited my previous business and I started coming to Africa initially as an angel investor, that was 2015. The big narrative then was Africa rising. And it was a hype, right? It was, there's some truth to it, and people coming back to Africa, it was just huge. And everywhere you go to in Lagos, the bar is filled with repatriates. People are coming back looking for opportunities and working in startup. Now, the verdict is still out there whether that hype is true. Because what hype was based on was this high-level macro data about Africa. Billion people, especially in Nigeria, 200 million people, mobile phone penetration, and consumers, youth, and all those kind of stuff. And now, when you dig deeper, you realize that the market is not that huge. It's not as big as we saw it. Like 1 billion people don't have spending power. Most of them don't have smartphone. The people that have smartphone don't have data, and the people that have data don't use it to browse the internet regularly. The people that browse the internet regularly don't use it as a means to buy stuff online. So the old places around e-commerce started to unravel. However, the verdict is still out. It's not. Africa is still rising. The fundamentals, like Augustine said, is still there. And that's what people like us are investing. And we believe fundamentally there's a lot of things to happen that will still happen in Africa, and there's a lot of problems to be solved that entrepreneurs can solve those problems using innovative business model. Now that leads me to the second thing that has happened since maybe 2012. Now, three major things has happened. One is more money has come into the market, more talent has come into the market, and some infrastructure has been built. So we've seen more VC, more investment, and if you look at the data that a lot of people have been collecting about investment in Africa, especially in the tech ecosystem, it's been growing, and we've seen that. And they're not dumb money. They are smart people like us as well, like Andrea, and people investing in those companies. So we're not dumb in our best days, right? So we see something there, and are more I see a lot of fund being formed every day, and that talent has been coming as well, like Augustine said. And more people now, and I'm not just talking about talent who are getting hired in a startup, but founders. The quality of the founders starting businesses in Africa is getting better every day. In Kenya, and we started seeing that shift between in Kenya, where you have the narrative of expats. We started seeing very smart Kenyans and very good entrepreneurial-minded Kenyans and East African building businesses as well and getting money. And that will continue. That trend will continue. In Nigeria, you have lots of talent, people who are second-time founders, or people who have spent years in America or were spending years in corporate, coming and building businesses and attracting similar talents. So we've seen that. The third thing is infrastructure. Now, when companies like Jumia started in Nigeria or Konga, They have to build all their infrastructure themselves. They have to build the payment, they have to build the logistics, they have to educate the market, all of those things. Now, if you want to start a business in Nigeria, you want to start an e-commerce, you don't have to worry about payment. That has been built. Actually, you don't even have to worry about logistics as well. That's been built. And a few other things that have been built as well that you can layer your business model on. Now, you still have to worry about vertical integration in some level, but a lot of infrastructure are there, and it will continue to get better as we move on. And that leads me to the third thing, which is about exit. Now, the way I view this is we're still very early in the venture ecosystem in Africa. We just started like yesterday. Now, if you look at where we compare ourselves to America or the UK, they've been doing this for years. American venture ecosystem is more than half a decade old. You've seen a lot of money gone into that to build it. Some money has been wasted, but a lot of money has built so many resources that we see now, and so many founders, repeat founders who have become venture, and a lot of money has been proven. So you have pension fund investing in venture in America. Now, for us, and then you can see the exit as well being mature, where you have venture-backed businesses, IPO, and now buying other venture-backed businesses. So you see that very good venture cycle. Now, we're still not there in Africa. So in some cases, whilst myself and Andrea would be expecting, or we hope that we get exit in the next 5 years for some of our businesses, the reality is it's going to take longer. And then some of the exits might come through secondary acquisitions, and some of them might come in other means as well. But we're early. What we are building now is maybe the first wave of venture in Africa. And we hope that our LPs will be patient enough to back us more and more to build that stack along, and then we start seeing meaningful exits. We're grateful for the ones we are seeing now, DPO, Paystack, and the rest, but it's still very early, and we're going to see more come through.
Great. No, fantastic. Yeah, I love both your responses, and I couldn't agree more. And yeah, of course, I'm just as bullish about Africa Tech, which is why I do what I do. And this actually links very well to our previous panel, where I asked them kind of, what is your parting thought? And everyone was saying, the time is now, the opportunity is here. It's for us to, to take advantage of it. We have to start somewhere. And I agree, we're in the early stages of tech entrepreneurship, and it can only get better. Great. I want to now shift to some questions. We have some questions here to respond to. So there's this first one. Let me give this one to Augustine, because you know quite a bit about the East Africa tech ecosystem. This is from Benjamin, and he asks, could you share the best platforms or organizations as an angel investor to find post-revenue opportunities in East Africa?
Right. Thanks, Benjamin, for that question. And I think this is one area where the question of the best is a bit subjective, because what actually is happening is that we have quite a lot of different players focusing on very different sort of aspects of the venture building process. And so as an angel investor, if you're looking at visibility, just being able to discover sort of who are some of the entrepreneurs, all the ideas and innovations coming out across from the continent, I think for me, the first go-to platform is things like Disrupt Africa, VC for Africa, How We Made It in Africa. And essentially that to me is the stories that are being told about these companies. And this to me is important on the discovery side, mostly because there are quite a lot of companies out there that oftentimes, they just fly under the radar. And you always want to be able to find what are some of the basic information that you need about that company. Who is the founder? What's the market focus? Who are their partners if they had any other investors on the company? We use Crunchbase, for example, quite a lot for discovery as well. And so I think this is especially especially when we are benchmarking on what are the companies that have raised funding, what are some of the sectors, and that sort of gives us the opportunity to go out and look for companies. Still, I think a bigger portion of our work is actually on the discovery side. We're often going into events, even participating in forums, because it's more important for the companies to discover, sort of for the entrepreneurs to find you as an investor, or even an organization like Endeavor, just because the numbers are out there, and it's our role in terms of finding the opportunities, from our end. There's still, I think, the second component, which is the strategic partnerships. And this is where we leverage a lot of our sort of own network of partners. And this, I think, is the area around sort of the mutual benefits, sort of around the pipeline building process. What you discover is that any company that comes, let's say, to Endeavor, there will always be several options or outcomes. Either they are ready to go through, they are on track, but it's not the right time yet, or maybe they are too early. And especially in the too early or on track category, which is where the majority will be, it's very important for us to identify partners who we can work with to help these companies in the earlier stages, since they are not ready for Endeavor. So this, to me, is where we invest a lot more effort in terms of our strategic partnerships, whether it's organizations like Growth Africa, iHub, NILAB. We work a lot now. For example, we're looking at expanding to Tanzania, so looking at companies and hubs across East Africa, Tanzania, Uganda, for a market like Ethiopia, where we've also been trying to get new partners on the ground. So I would say partnership is key for us in terms of furthering the whole sort of pipeline building process, and especially being able to provide support for companies that are not ready for Endeavor. And then the final part would be, of course, I think what we've discovered is that most of our companies don't tend to do a lot of marketing in the earlier stages, but there's always quite a good number of programs, and especially on the media side, that highlight companies, and especially programs that focus on awards. So one good example here is we've been having ongoing conversations and partnerships with the EY Entrepreneur of the Year Award program. So these award programs as well, whether it's just a simple pitch, Pivot East, or all the way to a global award system program like Entrepreneur of the Year Award. So this really help in terms of signaling where their companies are, or which companies are actually disrupting their different markets, and also where sort of these companies are coming from in terms of the support, ecosystem support that they've received. So this is our approach, I would say, and it's graded, of course, but I always feel that from a pipeline building point of view, the bigger sort of responsibility falls on us as ecosystem players and builders to discover the companies, because their job is essentially to build companies and not to come chasing after us. So yeah.
Great, thanks for that. There's actually, there's a.
You're on mute, Andrietta, or we can't hear you. Sorry.
Oh, really? Hello, can you hear me now?
I can hear you. I can hear you.
Okay, I was just going to mention that, just in relation to that question, that Kinyungu Capital, Kinyungu Ventures recently wrote an article. It's titled "Who's Writing 25 to 75 Checks for Early Stage Kenyan Companies?" So if you can find that article, they list a number of people doing angel investments, so you could connect to those groups. Okay, great. Let me pick another question. There's a question here about the term "the African narrative" keeps being used. What does it mean exactly? Dotun, do you want to take that up?
Yeah, I could quickly take that. I think I've alluded to that because I had that question in my mind when I was answering the other question about the future. Again, the narrative could be anything that people will say it is, but in terms of what we're discussing now, I think, I mean, I'm guessing here, it means that African rising narrative, which is 1 billion people, the youngest continent in the world, mobile phone penetration, lots of gaps in the market where entrepreneurs can come in and build stuff, and moving that narrative away from what most people know Africa to be in the West, which is a lost continent, war, famine, and a lot of other things that you can read in the news. But if you shift away from that and look at Africa, the opportunities, the challenges create the opportunity in Africa. I think that's what the narrative is when people are saying it. Now, we just have to be careful not to go into the extreme end of the hype that we form the basis for some business decisions that might not be in consonance with reality. But there is a valid African narrative, and that's why people like us are investing in the continent.
Great. Fantastic. We're coming, close to the time when we need to finish our panel. And so before we do that, I just wanted to have our panelists give us, one or two parting thoughts, around kind of the Kenya, East Africa, Africa as a whole, tech investment ecosystem. Just yeah. Augustine, Dotun, you can go ahead.
Yeah, happy to. So again, it's always cliche to say to end with a very positive note, and I love to do that as well. Say there is opportunity, there are challenges, but there are opportunities. But I think I want to talk, and I guess most people that are listening here are entrepreneurs, and my parting thought is: you are doing an incredible job. You are building the future of the continent. I run a podcast called Building the Future, where I interview entrepreneurs across the continent. And I've been recently interviewing investors as well. And I realized, again, that entrepreneurs are doing the most difficult job, because you have to be crazy enough to imagine a future and believe, and be crazy for you to believe that you can build something different to create that future. And that's what you're doing. So well done. Kudos to all entrepreneurs that are listening to this, and we are here to support and help you build that dream and scale it and make a success out of it.
Great, that's fantastic. Yeah, completely agree, and of course aligned with that. Yeah, we're much further ahead than when we started, and I think it can only get better in terms of the opportunities that await the tech entrepreneurship ecosystem. Okay, fantastic. Let me see if I can get also Augustine to give us a parting thought.
Sorry, my mic. Sorry. My connection is really bad, so I didn't hear the question, so I just logged back in, if you don't mind.
Sure, it's your parting thought.
Yes, now I can hear you.
Yeah, so the question is, what would be your, we're closing up now the session, and just wanted to get a parting thought from you.
Yes, so I hope you can hear me well. I think yes. I was just looking through my earlier notes on the parting shot. And for me, this is one thing that I've actually found myself quite using it a lot lately, especially with companies that are coming through the process. And the idea here is to think of every part of this kind of fundraising, whether it's a fundraising process or networking building process, as a negotiation. And this to me is really important because I find that the companies that have done well in our program often have one thing in common. They are much better negotiators in terms of selling their ideas, pitching their ideas, and getting their ideas across. And those that struggle the most with support, especially, is those that look at the kind of support they receive, and especially even during the due diligence process, as being a sort of a questioning or overtly sort of a difficult process. This to me is the biggest challenge that we find, more than the ideas that come through our programs or the kind of innovations that we are seeing out of the market. A big portion of our work actually falls around preparing entrepreneurs in terms of communication skills. And this is even more important at the moment because of the ongoing pandemic, which has made everybody essentially adapt their engagement, whether it's companies like ourselves or organizations like ourselves that support entrepreneurs. We've had to shift our entire processes online, which brings a whole new layer of engagement and communication. And so again, emphasizing the need for entrepreneurs to improve on their communication skills and adapt them for even virtual processes for due diligence. So once again, my parting shot is everything is a negotiation, so come prepared.
Fantastic, I love it. Thanks so much, Dotun and Augustine, for lively and very insightful discussion. And also thanks to our earlier panelists. Thanks everyone for logging in and listening. I hope you picked one or two things that you can take away with. As you can hear from the speakers today, we're very passionate about Africa, about tech investing and tech ecosystem. We've given our lives and our careers to this. Very much excited about private sector development as a development tool because it's sustainable, and you create jobs, you create employment and dignity for African citizens, and that's what we care about. Thank you very much, and this marks the end of the event.
Thanks.